Today is Wednesday, December 27, 2023. It's a couple minutes after 9 a.m. Eastern right now, 30 minutes before the market opens. And there are 7 levels identified today. The vertical dotted line on the left is where the SPY or spiders closed yesterday, December 26, and everything after that vertical line will be today's activity in the spiders. You'll notice that the top and bottom bookend levels are shown as dotted lines. This is because they are relatively close to one another, roughly 4 to 5 ES points. They're all important, but if and when the spiders come into any of these levels, the likelihood is increased that they could reach a nearby level before pulling away in the other direction to provide a base hit. This means it's a good idea to treat these levels as a zone and consider reducing your E-mini contract positions as trades are taken at these levels. For example, if I see the spiders coming down into 474.07, I might buy 1 or 2 contracts at that level instead of my usual 3 or 4, and then buy again if they continue lower into the levels below. Averaging in across levels is the idea, and that will create a new base hit profit target with the average entry price, if, of course, the spiders get to any of these levels. So unless something unusual happens, it will probably be another slow, low volume today. But we'll check back after the market closes today to analyze and provide a recap. The market has closed, and we're looking at the price activity in the spiders for the day, and it's obvious which level produced the trade today. There was one base hit trade pulled from the market at the 475.55 level, and we'll dig in a little deeper to see how this level was traded. I'll just mention at the outset that watching this trade develop today was just about as fun as watching paint dry. It was a slow and low volume day as predicted, but this strategy is a process, and treating it as such means you are looking for signs and signals within certain parameters while a trade is active and marinating. If X happens, then execute Y, just to keep it simple here. Quick base hits are the ideal scenario, of course, but when a trade looks wrong, and I'll say that in quotation marks, it's not often wrong unless the X happens. So this trade today is a good learning opportunity of how exercising patience pays off. So at 9:45 a.m., when that candle closed, the spiders were hanging out above the 475.55 level. So an order was keyed in to buy ES contracts if and when the spiders were to come back down into 475.60 and touch that. And they did that about a quarter after 10 a.m. And then they just toyed around with this level for over 2 hours before the base hit was well hit. And I believe that there could be a learning opportunity or two in here. So I'll pull up the ES chart too, and we'll take a look at them side by side, which, by the way, is a configuration that I use when trading these. I've added lines on both the SPY and the ES charts to show the base hit profit target level and the fumble threshold levels on each chart. And the charts have been moved a little to the left, by the way. So you can use the vertical dotted line to get your bearings. This marks the beginning of the trading day at 9:30 a.m. Eastern. So this is when the spiders came down into 475.60, and exactly when the order to go long in the E-mini contracts was activated. So the corresponding price in the ES was around 448.23.50, so long from that point. Now the 4-point base hit profit target in the ES is easy to determine. A limit order to sell all the contracts in that position was put on the chart at 48.27.50, and for determining the fumble threshold, I'm using the SPY levels. So certain things need to happen below this level in the spiders, not in the E-minis, before decisions would be made to change course if necessary. So the trade was out of the money for most of the next hour or so, and to the unenlightened, this would have been the time when the trade may have felt wrong. For me, this represented being in the red for about $800 to $900 at times while this trade was active. But again, this is a process. So since not a single signal materialized that would identify this trade as a fumble, it meant that you just keep letting it marinate. And when the trade got back above water, it still played around and didn't just hand me the base hit. In fact, it got within 7 cents, I believe, of the profit target, just 2 ticks in ES before pulling back a little. And there is a rule that I use where if a certain thing happens, I would call this trade a wash if and when it got back to the break-even point. You want the full 40-cent base hit, but sometimes you need to realize that the price action just not be strong enough to give you what you want. So taking a wash for the trade is better than a fumble. But with this trade today, that rule was never invoked. They did come back to the entry point, but I held on with a little bit more patience. They finally did hand me the base hit about 20 minutes after 12 noon, when both the spiders and the E-minis did this little spike here. And even if you didn't have a limit order in the system or too slow to close out the position, if you were doing this manually, say, you can see, if I advance the chart a little, that base hit was still hit later in the day. Clearly that level was important, and you've got the 40 cents or the 4 points in the ES farther down the line. It just took time to develop, And this strategy teaches patience, of course. So I think that's enough of a deep dive on just one little trade here. So we'll take a look at the log now. So here you have your one base hit, which equals 4 ES points. Took all day, but with a handful of E-mini contracts, it was good for a slow day. Tomorrow will be the last day that I will trade this week. Friday is the day before a holiday, and like with Thanksgiving and Christmas, I don't put money at risk on those days, but I'll still calculate the levels and make a recap video on Friday. Thank you, and I hope you found this information interesting and helpful. Have a great day.